What's going on, investors? AK from Fallible here. And you know how I'm always talking about keeping a trade journal so you could record each trade, and the ones you screw up on you could analyze and learn lessons from? Well, in this video we're going to do exactly that with one of our trades from the macro ops portfolio. In this trade, well, we really butchered it. I'm talking about we really screwed the pooch on this one, which is actually a strange phrase that I don't understand why anyone uses, because technically that would be bestiality, wouldn't it? Which is disgusting. So from now on, why don't we just think about what we're saying before we say it? So for example, I will not be saying screwing the pooch anymore. But anyway, this trade case study is all about Gaia, which is a stock we got into, which was a great idea, but then we really screwed up the management, as I said. Now my partner from macro ops, Tyler, is going to take you through this trade, show you where we screwed up and the lessons that we learned. So sit back and enjoy.
So this was a stock called Gaia. It was something that we've been following since March 2017. We were very bullish in the stock. But instead of entering on the breakout right here, we entered late up in this area, and then we added a small amount, and then we sat in the trade for a very long time, from about April 2017 all the way until the beginning of 2018, where we finally decided to take the position off because it wasn't going anywhere. Now, the fact that we bought in late was the first mistake, but we continue to compound our mistakes because we checked into the fundamental bullish case again, and we still really loved it, and the stock broke out in March. But instead of taking action, we sat on the sidelines, and similar to this mistake over here, we were trying to wait for a pullback, and we didn't quite get in, and then it ran up really big, and we didn't want to chase, so we were left out of the stock. Then it made another consolidation, and instead of buying on this break, we waited again and missed the run up again. So this was a stock that ran from around $9 when we first covered it, all the way up to 20. Yet we didn't really make that much on this stock because of our poor execution. So we go and we review these types of trades to figure out why we did that, why we made those mistakes, and we implement concepts and strategies within our trading portfolio so we don't make those same mistakes again. And so the core lessons from this slip up of ours is just that we need to continually working on the basics, and this is something that every trader needs to do. Let winners run, really having patience and sitting on hands of winning trades. But in Gaia specifically, when the bullish case is still valid, we can't let the fear of short-term pullback shake us out. We were trying to pinch pennies here when we had high fundamental conviction, and it didn't make sense to wait for the stock to pull back. As soon as it broke, we had that fundamental conviction. We sort of should have swung at that fat pitch when it came, and Gaia was as fat as they come. So we really failed in this regard. We should have just entered it, not tried to pinch pennies. So this is an example of a lesson that we will incorporate into our trading process going forward, so hopefully it doesn't happen again.
See, this is why trade management is so hard. I always say it's the hardest part about trading. We spent a lot of time researching Gaia, and it was a great play. It was undervalued, and actually I'll link to the research in the comments. You could check it out. But even after doing all of that and finding this great play, it was still only a very small part of the entire process to make a successful trade, because most of the profit or loss is going to come from the actual management, where, as you saw, we screwed it up. But because we recorded this trade and all our previous trades in our journal, we started seeing a pattern. We weren't holding and sitting with great fundamental positions. We were trading too much in and out of them, which was screwing us over. So we saw that pattern and then put in new rules to adjust for it. So the first thing we did was loosen our rules around our stops, because we didn't want to keep getting knocked out of something that's going to have a significant long-term trend. And to adjust for those looser stops, we also decided to size small. Now you can see where these rules already went into effect with one of our recent positions that we put on, Yatra. And we actually made a video about that company in the past, which I'll link to above if you haven't seen it. And hey, if you learned something from this video, then make sure you subscribe to this channel and hit that bell for notifications of future videos. I'm going to be publishing a lot more of these trade examples and case studies so that we can all learn from it. So subscribe, and I'll see you in the next video. Stay fallible out there. Bye.